Joe says here, can the TradeScalper ATO be set up to auto trade the signals? Not auto trade. You have to manage the signals. I don't think that auto trading is the way to go. Chris, auto trading is a problem because you're leaving your money in the hands of the computer, or if something happens, right? I don't like that. I personally think that you're much better off looking at the market, sitting down, managing your money, and getting out of the market. If there's news that occurs, for example, the auto trader doesn't know there's news. It's just going to do what it's going to do, and you may get stuck with fast markets or bad fills and those things that you may need to be in front of your computer to manage. So I don't recommend auto traders for that reason, because I really want to be in control of what's happening here at the moment. You know, you have to take into account, for example, it's a good question, right? Because I really wish I could auto trade this and just walk away. And I live in Florida, so go outside and enjoy the sun instead of standing here and waiting for these orders. But the problem is if there's a news event, or if there's something occurs, or a bad tick, for example, if you've ever seen the chart where there's a tick that's like this, right? It's called a bad tick. That it's just bad data that comes into the computer. You know, the auto trader is not going to understand that's a bad tick, or a candle that's like this. It's just a bad data that came in, and there's a candle that will interfere with what the auto trader is trying to do, right? And so that's a couple of problems with the auto traders I've noticed. Okay, I'm going to get back onto limit orders and market if touched orders. The idea behind a market if touched is to get out of the trade and to get into the trade. So recently, instead of me waiting for my limit order to be filled, I'm using market if touched orders, even though I may get a tick of slippage, or a better price, or the exact price. Even though I understand that that's something that I have to deal with, I'd rather be in and I'd rather be out. So I'm recommending, you can definitely use limit orders if it's right for you, but I'm recommending that you start looking at, especially getting out of the market, where you say, okay, I made my profit and I want to make sure that I'm executed. I want to get out of this trade so I don't have to deal with it touching my profit and then it not filling me and then it reversing. Once it hits your profit, you should try to get out of the trade. And obviously you can click the market, right? Just get out of market. That's something you can do. But think about MIT orders in a different way. They're protecting you because it hit your profit, what you wanted to happen, and you should be out of the trade. Algia says here, how long would you say each TradeScalper notification is good for? Example, long alert comes in at 9:40. How long before? Let me just forward that to everybody. I think as soon as it happens, you should take it. Okay, so this is a short signal here on the Atlas line. 30, looks like 31.10.19 quarter. Okay, just take that.
Order filled.
This is the Atlas line. I'm not sure if you're able to hear the doorbell sound. There's an audio notification that occurs. Here to go short. So back to your question, Algia. As soon as the order appears, you should take it. You should take it, right? You shouldn't hold off and wait 10 minutes, 15 minutes. It appeared for that moment. You know, scalping is quick, so you should definitely look to get out of the trade. I'm going to put here a buy.
Order submitted.
1, 2, 3, 4, 5, 6, 7, 8. Okay. Algia, let me know if you're okay with that answer that I gave you. You should take the trade immediately after it occurs. You shouldn't hold off on taking the scalper. If you can get a better price within a couple of seconds or 30 seconds or so, that's fine. But you don't really want to wait 5 minutes and then decide to jump in. Okay. All right. Next question here for Joe. Can you speak a bit louder on the mic? The sound is coming too low. Joe, how does that sound? You may also have a volume button there, Joe. So just let me know if that's a little bit better. I put the speaker here closer. All right, sorry about that. Everybody can hear me okay, I'm assuming now. All right. Did I miss any questions, by the way, while I'm looking at the market and answering questions and trying to trade all at the same time? I think I got everybody. Okay. The next thing is stop orders. A stop order converts into a market order. So if you have a stop, so for example, if I have a stop up here, this would be converted
Order submitted.
into a stop order right here. So as soon as a market order, as soon as it hits your stop, just think market. Okay. If I use a market if touched order here, it'll automatically fill me. So I can't use a market if touched order to buy. What you can use is a stop with a limit. And a stop with a limit looks like this.
Order submitted.
So what a stop with a limit is all about is when it touches this price, you can say and dictate how much you're limiting the amount of loss, you're limiting the amount of slippage that occurs. A stop will convert into a market, so you may have slippage. A stop with limit is you're limiting the amount of slippage. That's what a SLM stop with a limit is all about. And you can
Order
dictate
canceled.
with how much slippage you want. Typically, you use a stop with a limit for 0 or for 1 tick of slippage. It's not really meant for more than that. So that's a stop with limit. You have a market order, you have a limit order, and you have a market if touched order. We covered phantom orders, which I think is important. We covered, let's see, this thing is going to hit the stop. We covered the trade scalper questions, and I'm waiting for the ATO, the at the open too, which it has not yet. Let me see, it is turned on. Yeah, it hasn't hit yet. It hasn't appeared yet. All right, very good. I'm going to also show you something else here. Besides the E-mini S&P, there is a market that works really, really well on the trade scalper, and this is the crude oil. And I'm going to show you here the crude oil. The best way to do that is for me to bring up another chart. So we leave these up so we can actually see and continue seeing these. Okay, so this is, I'm going to switch here to the crude oil chart. And I'm showing you this chart because I've noticed that the results are very good on the crude oil, really, really well. So let me just bring up that chart. Okay, so this is the crude oil. Let's put this, see where I'm going to put this, put it right here. I guess out of the way, right there. So this crude oil chart right here that you're seeing is the trade scalper on the crude oil. And it produces a lot of signals, and it actually works better at some times that I've noticed than the E-mini S&P. So yes, you have, for example, this trade didn't work here, but most of the trades that I've seen on the crude oil are excellent. And so I'm just going to scroll here through the chart just to show you some examples of yesterday and today on the crude oil, just to show you how and what we can do with a software like this when trading. So you see all of these orders, not that I want you to take every single order, and I think that's a mistake. You don't want to take every single trade that comes your way. But even if you took half of these trades, this is close to an 80% or more hit rate on all of these signals that you're seeing. So this is something that I'm looking at seriously as promoting. I'm not a big crude oil guy. I'm an E-mini trader for the most part, but the crude oil is actually a great market to look at if that's something you're interested in. All right, very good. Some of the markets you can't trade. It's true. So some of the markets, for example, I always refer to lumber or rice. Those markets are not really markets that you can trade or should trade or want to trade. I think that if you're looking at a market to trade, you should stick to like 3 or maybe 4, and that's it. The FESX is a great market. The FTSE, the E-mini S&P, the Nasdaq, and the crude oil here on the trade scalper. I would stick to just a small basket of trades to do per day, and not try to do everything. You should only focus on what works. When you look at Forex or the currencies, there are so many options with Forex and the currencies that sometimes it's hard to pick and choose which currency pair to trade. Uh, you know, how am I going to approach it? It's just best to stick with what works. Okay. Greg says here, any recommendations on filtering the trade scalper? You can't look at moving averages. You can't look at momentum. You can't look at those things because they're all derived from history, something that has already happened. And so the type of trading that I do, Greg, for filtering is I try to stay away from conventional indicators as additional filters. Because if you put on a moving average, it's based on data that has already happened. So instead, let me offer you something else when it comes to filtering. And this is based on price action. Okay. The first thing is that markets will always test where they've been. So if you think of a low for the day or a high for the day, think about the market trying to and attempting to test that and maybe even going through it. As a filter, you could look at that and say, I expect to test at least once for the day, and I'm not going to trade if it bounces off of that test or against that test. So if, for example, I'm just going to show you here what we're seeing here. If this is the high of the day, and as the market comes up, it hits it and it starts to come down off of it, I don't want to be a buyer because I'm realizing that it just tested the highs and it's bouncing off of it and reversing off of it. So as a filter, Greg, you should start thinking about that way of trading as opposed to the moving average is crossed here, the stochastic is above 20 or above 50, or the momentum is above 0, and that's the reason for buying. I would rather look at the candles and the price and how they're moving to indicate whether or not I should be taking that trade as a filter. That to me is more important. Another thing you can do, Greg, to filter out trades is when the market is too slow or too volatile. Like I said, stay away. You shouldn't trade the last half hour of the day, and you shouldn't really be in the market the first, say, 10, 15 minutes as soon as the market opens because it's a little bit volatile. So there are things that you could do to help you as a trader. Just it's no simple things, right? Let's not trade the first 5 minutes where everybody is jumping in and placing orders and it's a chaotic situation. You're also going to notice the last half hour of the day, the market accelerates. It accelerates because the orders that are day traders working on margin are trying to get out of the market. They're trying to escape it. And so they're just exiting their positions at anywhere. So the last half hour, you're going to see it increase or pick up, and it's a little chaotic. I don't recommend trading the last half hour. So there's little things like that that if you know and you can pay attention to, it'll save you from situations that could turn from being okay to worse. Ann says here, do you need to change the the ATR for crude oil? No, Ann, the ATR on any market is the setting of four candles. Whether you're looking at a 5-minute chart, 60-minute chart, any market, it's always a setting of 4. Yeah. Well, the manipulation does occur, and I can give you so many examples of manipulation. I'm going to give you one. Somebody mentioned gold a little while ago, and I think it was Ann. Did you know, Ann, that gold is the most heavily manipulated market that exists? The reason is because these prices on the charts that you're seeing is not based off of actual trading, buying and selling. Okay. If you look up how the gold price is configured, they get together in London, 4 banks, I think it is, last I checked, 4 or 5 banks in London get together a few times a day. I think it's three times a day. And this is a while now that I've discussed this. And they come together and they say what the price of gold should be. And these 4 banks do this 3 or 4 times a day, and it's manipulated in such a way to their advantage. So you can't trust gold as the buying and selling price that you're seeing as actual supply and demand. I'm sure supply and demand has some part of it, right? Obviously, if everybody's buying gold, but the actual price that you're seeing, the settlement price and the prices that they configure and adjust is completely manipulated and fake. So you should know that. And I would definitely say just do a Google search. You'll find out. I actually did a blog post on it maybe 5 years ago. What year I did that in, but I can do a quick search, see if I can find it. And I'll give you the link, and you could read it for yourself. Yep. Okay. So here is the. I did it in 2012. 2012, I wrote this, just so you know. And here it is. Here's the link. I just did a search on the DayTradeToWin blog and I just typed in gold and it came up. So there it is, Ann. You have to be careful when these things happen. And I think every market's manipulated to such an extent or to a degree. I do believe that. So gold we know of because it's public what they do. But I can't tell you exactly how they manipulate other markets. I do know a few things that they manipulate with other markets, and I teach that in mentorship. It's much more involved than just this public thing. It's more of a rigged system. Okay, this trade that I am looking at as a short was in fact I thought this was going to get stopped out as it reached the on the opposite side of the outline, but it didn't. It's coming down in my favor. We've been in this trade for 5, 10, almost 15 minutes. I really do have to say that with a time-based stop, you shouldn't hold on to this trade, especially if it's in your favor. Greg, back to you, Greg. You asked me something else about how to filter trades, right? I'm going to touch on that a little bit more, a little bit differently here. If you've been in a trade for a long time and it's not going in your favor, what are the chances that it's going to go in your favor? Within the next half hour, 5 minutes, 10 minutes, you should cut off and have some type of time element to get you out of the trade. When you're looking at things that could help you or filtering out trades, part of that is trade management as well. And trade management is based off of if I'm in a trade, I've been in it long enough, let me get out and cut my losses, or if I'm at break even, or if I'm at a small profit, it's long enough. So now the trade scalper here is indicating short here, 3108.75. So I'm going to just go ahead and do a short here. I'm going to add here to show you. Sorry, I lost there it is. Okay. So 3108.75 to go short.
Order submitted. Order filled.
Okay. So just to show you here, and if I have the 1, 2, 3 ticks.
Order submitted.
Right. And this I have to change, right? The number of contracts will be for 2 as a stop, right? So just to show you the trade scalper and Greg going back on managing trades or filtering trades, if you've been in a trade for far too long, the chances of it going in your favor at that point, you should think about getting out of the trade. Okay, I'm gonna put this here. Let me see, 1, 2, 3, 4, 5, 3, 4, 5, 3, 4, 5, 6. Okay, that's one thing that you should do. The next thing that you should do, Greg, back to filtering, trade management helping you, is if it touches your price and it bounces off of it and you're not filled because you're using a limit order, that may have been the only opportunity to be filled on that price. And if it comes back to break even, you should get out of the trade. So with a market if touched order, it doesn't happen, right? It touches your target and you're out. But if you're using a limit order and it comes, let's say this is a limit order here, and it comes down and it touches and it touches and it touches and you're not filled on that price, you have to ask yourself, was that the only chance that it touched my target and now it's going to move on and do something else and reverse and go against me? You do have to ask yourself, should I stay in this? And the answer is no. You should, if it touched your price and you weren't filled and we have no idea what the future is going to bring, you should definitely get out of the trade. And so that's one other reason why I'm suggesting market if touched orders, because it alleviates that situation where it hit the target and the price that you expected. You didn't get filled though. Okay. So these little
order filled
snippets of things that occur in trading that will help you. And a lot of traders, I can't fault anybody because this is also a learning environment where things can occur that I've never seen before, and I have to adapt and learn from them. But for the most part, everything that I've touched upon today is true.